The last thing is there will be no longer listing pump and clearing exchanges.
I'm predicting that a Bitcoin price will get to 160,000 ETH BTC to grind even lower. One thing about ETH, it hasn't lacked narratives.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
We are here today because we just published a 60-page report talking about the 2026 crypto market outlook. Yeah, the report is titled Awkward Adolescence 2025 Crypto Market Review and 2026 Forecast. And it's on our website and also posted on our Twitter Presto Research account, so anybody can access it. There are two parts to this report. The first part is the kind of like a post-mortem of our predictions last year, and then second half is just going over the predictions from each one of us for 2026. And this episode will focus on the prediction part, and we just kind of go over what kind of predictions we've made for next year, and also, and more interestingly, have it debated amongst ourselves in case people don't agree with it or have a different views, or simply just want to know more about it. So and that way our viewers can have a better understanding of where we come from with these predictions. So the way I'm going to do this is maybe starting from me. I'll go over my predictions quickly and then leave the rest of the team to make any comments, ask questions, or just say that you don't agree or whatever, just have it debated out in order to provide more additional colors for our viewers. All right. So my predictions, the first one is a Bitcoin price target. This always kind of gets a lot of attention. And I'm predicting that a Bitcoin price will get to where I think is the fair value, which is 160,000. This target price is based on MVRV ratio. I always think that the framework is more important than the target itself, because by sharing the framework, my valuation framework and the assumptions behind it, people can play around with this framework and come up with their own views on what should be the fair value. I think MVRV is one of the best ways of determining fair value, because in my view, it captures both secular and the cyclical growth trend of the Bitcoin network. And this year, this is the method that I used last year, but I tweaked a little bit to factor in quantum risk, which I think will be increasingly an important part of the conversation when we talk about the Bitcoin's fair value. So I basically what I've done with my model here is estimate where I think the realized value will be by the end of next year, and apply what I think is a fair MVRV multiple, which in this case is a 1.9 times under base case scenario. And the base case scenario basically assumes 30% quantum risk. Basically, it's a risk. It's a discount to reflect the investors' concerns over uncertainties of quantum upgrade. And I think in previous years, people were willing to kind of dismiss this because it was considered very far away. But I think given that in 2025 there has been a lot of technological advancement, this will increasingly become, I think, one of the overhang on the Bitcoin valuation. So that's my first prediction. The second one is the tokenization reaching 490 billion. And here that I use the term tokenization very broadly, so it includes stablecoin as well. So for the stablecoin part, my forecast says that the market cap will reach 450 billion. And for the non-stablecoin RWA, think that it will reach about 40 billion market cap. And I go through again my framework for arriving at this number. For stablecoin, basically, I break it down to both, I guess similar to Bitcoin, secular and cyclical drivers, and estimate their growth rate respectively, and then combine the expected growth of those two segment to arrive at 450 billion stablecoin market cap forecast. And for the non-stablecoin tokenization, i.e. RWA, basically assume that the growth rate of last year, which was of 100%, will continue into next year, and it's especially driven by the not just the tokenized credit, but also tokenized equity as well, which I think is becoming increasingly more popular in recent months. And lastly, my last prediction is that the basically the visions described by SEC Chair Paul Atkins during his Project Crypto speech in July this year is going to manifest in different ways. And basically, in that speech, he talked about four things: crypto distribution, the custody services, super apps, and DeFi integration. And for each one of those categories, I kind of make a predictions on what's going to happen. First one is that for crypto distribution, I predict that there's going to be 15 token sales through Coinbase and Kraken. Yeah, and then for custody services, I predict that the BNY is gonna grow its market share and secure about 10 billion crypto assets under custody. And for the super apps, I predict that the likes of Charles Schwab and E-Trade is gonna start providing crypto trading services. And lastly, for DeFi integration, I predict that at least one of JP Morgan, BlackRock, Fidelity, or Goldman Sachs will integrate with leading DeFi protocols such as Aave, Horizon. So yeah, these are my predictions. And what do you think, guys? You think I'm just kind of dreaming?
So I asked the questions actually. So it sounds like, I mean, not sounds like. So in order to arrive at the BTC prediction price around 160K, the main framework that's being used is the market value over realized value ratio.
Yeah.
And in order for the realized value to grow about in line along the historical trends, I think there needs to be some positive catalysts. And I don't think you explicitly said it, but I would assume that one of the positive catalysts are the growth in RWA and also growth in tokenization market cap. But why is it that we've seen such a huge growth in tokenization market cap this year that has not translated into explosive growth in BTC price? How do we make sense of that?
Okay, so BTC price target and RWA, they are not related. They're two different predictions. So I'll maybe address them separately. For the BTC price prediction, I'm assuming that the RV is going to grow based on things like institutional adoption, especially ETF growth. Because, as more Bitcoin end up being held in the ETF wrappers, that's going to basically a lot of Bitcoin is going to move. What RV is basically you're valuing BTC at the last transacted price on chain. So as a lot of supply actually ends up in the ETF wrapping from previously, maybe some personal wallets or what have you, that's going to result in realized value slowly creeping up because there's going to be ownership is going to change. The ownership is going to change, and that's going to be recorded on chain. So that's and then in order to kind of estimate that growth trend, last year what I did was I just applied RV growth rate of 2024 because that was the year when the ETF became available. But then I think it turns out to be a little bit more aggressive because also 2024 happened to be a very bull market. So the price was going up, and therefore RV was also going up very quickly because these on-chain transactions were taking place at a rapidly rising price. So what I did was I actually took, in order to be more conservative with RV estimate, I took the average of RV growth rate from 2019 through 2024, excluding the outliers, which was 2021 and 22. So I ended up with something like I think it's something like a 2% growth rate for RV for next year, and that's how I Yeah, that's the kind of logic behind the RV estimate. Now with RWA, so that's not related. RWA estimate is not related to Bitcoin price target. RWA, I'm expecting that market cap will grow to 40 billion. Just under the assumption that the growth that we've seen this year is going to continue into next year. And what drove the growth this year was basically investors' demand for higher on-chain yield. And most of that demand was met by tokenizing treasuries and other types of credit instruments from the traditional finance. And basically assuming that the trend will continue, and there's no reason to believe it won't so, especially given that there's additional demand coming for tokenized equity, for instance. So yeah, that's the main reason for that.
Do you think the quantum, I guess, risk discount factor is bid too early? I mean, is it going to be hot topic in 2026?
It's not going to happen tomorrow, right? So 2026.
Yeah. So I don't know if you noticed, recently there has been a lot of debate about this, especially between two most respected voices in crypto. One is Nick Carter. The other one is Adam Beck. I don't know if you've been following that. So Nick Carter is the one that thinks that this could actually happen within the next 10 years. But the thing is, unlike other centralized entities who can upgrade their protocol into the quantum resistant standard, blockchain the blockchain network it's more difficult to do so in a speedy manner because it's decentralized and requires a lot more time for coordination. So Nick Carter basically believes that given the time that it's required to have a to arrive at consensus and push through all the proposals, and also get the people to migrate their coins to the new standard, and all of that is going to take a very long time. So the time to start talking about this is actually right now. So that's why he's been urging that we start talking about this. Whereas somebody like Adam Beck is saying actually that's already being done, and it's happening at a pace that in Adam's view is not going to jeopardize the value of the network. So he's coming from the opposite side. So I'm not a quant expert, not like Rick, who's done a lot of work on it, but I just think that whether it's not even, it's my call is it's not so much on whether I believe that the quantum is going to happen sooner or later, but my belief that the quantum will be a main part of conversation in 2026. So some people will think that maybe the risk is not that high, and maybe for these people you can assume much lower quantum discount of something like a 10% or 5%. But though if you believe that it's actually a more time-sensitive issue, then you can assign bigger discount, like 60, 70, 80%. But what I think needs to happen is start to have a framework, valuation frame, or what I think needs to happen is investors' valuation framework has to have consideration for this quant risk, because it's not something that you can dismiss anymore.
Yeah, but I think it's just a consensus. I think there's like a small consensus where at the time when quantum becomes like a threat to Bitcoin or to whatever coin it is, there will be somewhat, I guess, upgrade happening, but the real threat will happen on the old wallets, or I think that's like the consensus right now.
Yeah. So I think there are three things that are going to be. So quantum is a risk for Bitcoin from three angles. One is people will be able to guess private key from a public address. So that's one. People are going to be able to crack the private key from a public address with the quantum computing. That's first one. And the second one is, like you mentioned, these old lost coins, because people not going to be able to. We don't know who the owners are, so they won't be able to migrate these coins into the quantum safe protocol. So that's another thing. And the third one is, I think you can even the ones that I think there's a way to hash your public address so that the private key cannot be guessed even from a quantum computing. But I think when the transaction is put into the mempool and waiting for it to be put into the blockchain, in that short period of time, it's still exposed to the quantum risk. So I think for these three angles, I think the people say that Bitcoin is vulnerable.
I guess since we are kind of running out of time, I'll just start my predictions then. So I made 3 predictions like Peter did. Mine's pretty simple. So the first one is that median altcoin funding rate sub-zero becomes a norm. I guess for people who is in this industry for a long time, I guess about 0.5 basis point was kind of a norm that people think. And positive funding rate is something that should be something that's natural. And then negative funding rate happens only when there's like a sudden big event or something, I guess, something that's weird going on. And I actually wrote the secondary OTC article last year, right? But one thing that was odd was that on the secondary OTC market, people aren't willing to buy, I guess, whatever crypto at 50 or 70% discount, but the funding rate was positive. So this created an arbitrage opportunity for trading firms, including Presto, to basically buy the SAFT OTC and then short it on perps. And you will also get paid on the shorts. So I thought it was kind of odd, but things are finally changing, right? You can tell that all the altcoins funding rate today, if you go to CoinGlass and type whatever altcoin you like, it will probably have somewhat, I guess, negative or zero. But it's changing. So I think the finally kind of funding rate is finally pressing the reality, and I think this will continue forever if the altcoin doesn't produce any revenue or add value. And my second prediction, I know it's kind of a bit lame, but it's basically saying that for now, Bitcoin didn't do anything. Now we can use Bitcoin as a collateral. As a state level, like New Hampshire guys issued Bitcoin-backed bonds, and I think they're still discussing, but in the housing front, you can finally use your Bitcoin as a collateral rather than selling when you need to buy a house. And yeah, so is this something new? I'll say no, because on DeFi, you could probably borrow by setting your Bitcoin as collateral. But I think it's meaningful that this is happening at a state level and in size and also in TradFi sector as well. And the last thing is there will be no longer listing pump in Korean exchanges. I think there are different reasons why. The biggest reason I think is if you see today's the pump itself don't last long. Like it lasts like a couple hours. A couple of years ago, it lasted a couple of days, and it's getting shorter and shorter. And people know that the Korean listing marks the local top, and I have been discussing with lots of projects whether day one listing on Upbit or Bitsum is something good, because basically you're using all the cards, and in that sense, I left it for reasons. Number one is after the movement incident in Coin One, now government is forcing people to kind of open the market when there is enough deposit. So what happened on movement incident was Coin One opened the move market. I think the deposit amount was really thin. So what happened is they couldn't handle the enough buying pressure. So there was a huge price gap between Coin One and other exchanges. And second is the exchange consolidation and liquidity integration. Everyone might have heard the GoPax and Binance merger. This isn't really set yet, but if there is like a global, I guess, order book sharing system or something that's going on, I mean, it's pretty obvious that there will be no listing pump. And the third is that it's also that's going on, but there is a rumor that all the listing and delisting will be handled by the Korean government or somewhat centralized entity rather than the exchange itself. And if this happens, of course, it will be bad. There will be no, I guess, listing pumps. And the last thing is, like I said earlier, people are realizing that they're buying at the local top, and when they buy it up the listing, there'll probably be the exit liquidity. So I think people are getting smarter and smarter, and I think this will change the trend.
All right. I have a question, Min, about the Korean listing pumping. How much of that is actually just the people losing faith in altcoin in general? Because we are seeing kind of similar kind of thing happening with new listings in other exchanges like Binance, for instance. No, so it's not a uniquely Korean thing, is it?
Yeah, I think it's mostly for, I guess, Binance and Korean exchanges because they take the most volume and they're like the most, I guess, influential exchange. The thing is, Korean exchange listing has a fundamental benefit, right? You're kind of getting access to the most of the, I guess, fervent investor base, which is the Korean guys. But you can tell that in 2025, the Korean market wasn't like it was in 2024. So I think that's one has an impact. But Binance listing, I think will still have somewhat pump because Binance is number one. But I think for a bit or Bitsum, I think it will depend on how Korean market and Korean investors, I guess, perform, if that makes sense.
I also have some questions. So, is there a prediction taking into account, there's some positive catalysts coming up on altcoin markets, such as I think number one, there's news that ICO is going to be allowed again, both in the United States and also in Korea. Number two, general liquidity conditions are going to expected to be easing going to next year. So those two things may, maybe bring back the pumps in the altcoins.
One thing I think the biggest reason why I think there will be no listing pumping Korean exchanges is just people getting smarter and smarter. And it's just people knowing that the listing pump itself, it was just, I guess, repeated pattern for a couple of years. So I guess, of course, there will be some pumps on the good market. If the Korean market comes back with the ICOs and everything, there will be little, but I think it's just more the people learning that it's this repeated pattern is pretty nonsense. There is no fundamental reason behind it.
Yeah, why don't we move to the next one given the time? Sorry, I think my section was too long, I think. Yeah, let's move on to Rick.
Yeah. So mine are all somewhat institutionalization related or maturity related. The first one is ETH BTC to grind even lower. I wanted to start with this one because that cross captures something structural about crypto and often represents where we are in the cycle and sentiment. One thing about ETH recently, the last few years, I would say it hasn't lacked narratives or upgrades or even activity. It still leads on many metrics that it dominated in last cycle, but it has lacked a clear institutional role, which Bitcoin has experienced. ETFs are a good way to see this difference, but when allocators finally got easy access to both assets, they overwhelmingly chose Bitcoin, which you can see in figure 30. And that was not necessarily the narrative leading up to the ETF approvals. So the commentary is not on Ethereum's underlying technology, but more how institutions and experienced investors maybe, or TradFi people, build their portfolios and think about their exposures. Bitcoin, I think it has this brand that helps it fit more cleanly into an investment framework, whether it's a reserve asset or some hedge of some sort, or just wanting balance sheet exposure because it represents the broader crypto industry. I think Ethereum still requires some story, and the stories don't really scale. The stories that have existed haven't really scaled well or continued. So it's seen some lag there. There have been times this year this cross came up to light again when ETH was outperforming over the summer. But I think that has proven to be quite temporary as it fell way below 3K again recently, although now I think it's back to 3K. I think the pump was quite short-term narrative driven around DATs, and we all know the DAT trade has struggled quite a bit and the longer-term pressure seems to have come back. So I don't think ETH is broken necessarily. There is still a need within the industry for ETH, as a lot of the adoption metrics and usage metrics show, but it's quite mispositioned, I think, relative to Bitcoin, as we become more of an institutional product or asset class. So yeah, kind of bearish ETH. And this is a both bull and bear market point. So it doesn't matter which one we're in next year. Next one. On-chain venues taking meaningful share of TradFi equity volumes. So this is pretty specific to Hyperliquid, even though on-chain, I think, will do well on aggregate. And this is about volumes, not price. So I don't think most of us have ever thought crypto needed to replace TradFi, but we did expect it to outperform on specific products, both TradFi and centralized finance. And for example, when we look at perpetual futures, we saw through Hyperliquid, a crypto native venue, not VC funded or shield, 24/7 access, cross margin, fast iteration and product updates, taking quite a meaningful share of the largest centralized exchanges in under a year. And that was as relevant to one of the predictions last year. I think once that engine exists, plugging in new underlyings obviously is much easier, as we've seen this year. And equities are a natural step because a lot of the traders trading on Hyperliquid and those more legitimate venues understand them. And there is a demand for round-the-clock exposure, as we've seen via the uptake already. I think what's cool is the adoption has been quite fast, but I was thinking recently, if HIP3 and on-chain NASDAQ and the on-chain stocks on Hyperliquid came a year ago, when the AI boomer trade and wanting exposure to some of these AI-related stocks was more relevant, the adoption probably would have been way faster. So this good, quite steady progress has come even in a less exciting time for trading both crypto and stocks. And then obviously there's the necessity around ability to trade exposure anytime with like good margining. We still have some time before futures becoming 24/7 takes into effect or is being discussed in wider venues. So I think early volumes were kind of small if you see the chart, but the growth trajectory will be quite steep, I think. And lastly, Bitcoin volatility compressing. And this is a volatility prediction, but it's more a way to represent market maturity. We all understand crypto and Bitcoin as a highly volatile asset. And for most of its history so far, its volatility has been like structurally high. I think there are a lot of factors at play, but it could be a thinner market, more reflexive, more retail driven, etc. And options market, I think, had some constant pricing in of chaos as like a default, but that has been changing and will continue to change. As you can see in the chart, figure 34, you can see the different past 3 year kind of regimes. It's been somewhat steady around the 30 mark, but the institutionalization, ETFs, etc., brought in participants who think more long-term and long-term exposure and balance sheet management. Bitcoin, unlike ETH and like Solana, can't be staked. So if you want natural yield, particularly for like DATs that who now own a very significant chunk of Bitcoin, option selling or vol selling is really the only way to manufacture this yield now. So I think we'll see more players systematically selling volatility, which will push implied vol down. And this will also come from institutional owners of Bitcoin because they can't stake. And this, which also kind of is saying Bitcoin, different from other crypto, will start behaving more like a macro asset rather than a frontier one. So, yep, a maturity point.
I have a question for you.
Yes.
So, I mean, it sounds like your bearishness on Ether has like one of the evidence that you produce for that is kind of a lackluster inflow into the ETH ETF. But some people may argue that it's just simply a reflection of the market cap difference between BTC and ETH. Because with Bitcoin is, maybe 3-4 times larger in market cap than ETH, and therefore, you cannot really expect the same amount of institutional inflow to Ethereum versus Bitcoin. What do you say to that argument?
Yeah, So I looked at this difference. So it's on page 46. I compared the market caps to net asset of funds. I agree. So market cap, the difference is like a 5.1x Bitcoin over ETH. And the net asset of the BlackRock ETF funds is about 6. So on that metric, ETH has been doing a little bit better than the market cap, or the ETH ETF, sorry, has done a little bit better than the market cap ratio might imply. Yeah, that is, but despite it, I still think reflexivity of the price action will reflect more, and that ratio, I think, will will maybe normalize a bit, and we'll see the outperformance of Bitcoin ETFs.
I actually have a question too. So, wouldn't you say the rising tokenization and also Ethereum and Solana being the networks that are being up seems to be a beneficiary of that flow? Wouldn't that act as a positive catalyst to ETH BTC ratio?
I don't know if that's reflected, and I think the past year or 2 years has shown that it might not be relevant. Like when we look at all the metrics in the state of adoption, ETH still is dominant, and it is the most necessary underlying chain for a lot of DeFi activity and activity in general. And it's still been quite a disappointing translation of that into the price action. So I think people have really separated the fundamental components that don't pass through to prices and the price itself. So I don't think so.
All right. Okay. So for my predictions for next year, I titled it under the phrase, next year's going to be, crypto's going to be machine native and institutional grade. So my first prediction is related to the agentic space, AI and crypto, and more specifically with regards to the X402 protocol that was pushed by Coinbase this year. I think that, we've seen a lot of efforts to combine AI and crypto, but I think none of them really took off in a big way, especially with regards to things like agent-to-agent transactions, because there was just a lack of standardization, right? So everyone was kind of building their own efforts, own ways to express, how you apply AI to on-chain transactions, but there was just no way to kind of make these different efforts work together. So I think this year, with a lot of the advancements in the LLM models themselves, plus we're seeing these standards emerge from crypto native players and also large Web2 giants, right? So the combination of these two factors, I think, would be a huge tailwind for agentic transactions on chain for 2026. I already mentioned X402. You can see the adoption kind of skyrocketed in November, and we're already seeing peaks of 3 million transactions a day. So my prediction is we'll see a 10x of this next year, given all these factors. And yeah, the support from, not just the research side with Ethereum's ERC 8004, but also from the business application aspect, where you have, large players like Google pushing AP2, Coinbase pushing X402. I think it's kind of a good confluence of that business side plus the technology side coming together. And I think it would be a pretty good year for more creativity and more developer activity in this region, and hopefully we'll see more interesting use cases come out, and you could even have like more AI driven kind of like portfolio management, trading, just a lot of assistance that we're already seeing in kind of like the ChatGPT arena, where chatbots are continuing to inform and just kind of assist a lot of everyday actions. I think we're going to see that in crypto, and as agents get more get smarter with more bigger context windows, things like that, we can actually start to rely on them more than we ever did. Yeah, the next one would be for confidential DeFi. So I think this privacy has been a very long-term trend in crypto. It's been kind of one of the original cypherpunk values as well. And we saw this, it's always kind of been on and off, but I think this year was a huge breakthrough moment, not just in terms of price with things like Zcash capturing a lot of attention, but also I think for Zcash itself as well, we did see some fundamental improvements in the protocol. So it's beyond just price speculation. There were actually several reasons that kind of allowed it to really mature this year. For example, the growth in the shielded pools, which I highlighted, was actually concentrated in the most recent type of shielded pool that they have. So it's kind of the most advanced version that they've released, and all of the growth has just been in that most recent pool, which is more private, use better cryptography, things like that. So I think there are certain reasons that allowed this trend to happen. And then beyond that, we're also seeing, in the EF, they've pushed very hard in pushing privacy, forming like a privacy cluster, a privacy task force, and focusing a lot of efforts on pushing things like the Kohaku privacy preserving wallet. So I think it's kind of a bit overdue. I think it's always been a discussion over things like regulations. How can anyone kind of accept like a private protocol? But I think Zcash, the resurgence of that showed that the cypherpunk movement is still quite strong, and just like how I think we kind of memed Bitcoin into a global asset. I think privacy is overdue to kind of come back into the forefront. And I think that the last point that I want to bring up is on RWAs and that institutional growth that we're seeing. So these institutions also, they naturally don't want to have everything public on chain, right? So some level of privacy is needed. And I think because of that as well, we're seeing things like some of the interest in things like the Cantor network, where there's privacy controls built into the core L1. I think these considerations would be more and more relevant going forward, along the theme of the report, which is the industry is maturing. It's you kind of have to, I think, accommodate larger players with these considerations. So yeah, that's on privacy. And last one, a bit more straightforward. So it's on token disclosures. I think again with the same themes of the market maturing. So my prediction is that any kind of more serious team would take token disclosures more. They would kind of use that as a default to kind of differentiate themselves from maybe lower tier teams, and really see some trends in towards this goal. Where I think Blockworks this year, they launched a token transparency framework, which is a voluntary filing for token teams to publicly document how they think about the token and how they manage the token supply across things like the project team, so specific breakdowns on the allocation, things like market structure and financial disclosures. So I've also always thought this was it's just something that over time would become a standard, and as more professional investors come into the space, I think this would become more and more of an expectation. Right, so any long-term large investor would want to have clarity over how the tokens are being handled, especially I think given some of the recent cases as well, where certain acquisitions by players like Coinbase, they've acquired teams and basically acqui-hired the core team out of the token. I think that's quite worrying. So it's good to have proper documentation on how the teams are thinking about their tokens. And when it comes to things like market makers as well, something that's been traditionally very opaque, I think now with tools like CoinWatch Track allowing the use of TEs and specific API keys to report on market maker behavior, I think it's these kind of disclosures is just I think part and parcel of the industry maturing and market structure becoming more transparent and cleaner. I think it's just a matter of time before we see more public filings. So that's my 3 predictions.
So Nick, about privacy, why do you think? It really became focus of the market maybe starting from September this year. In your opinion, what explains the timing?
Timing wise, I think honestly it's a function of that, of how price drives narratives again. And I think that was when Zcash kind of took off. So my view is that all the building blocks have always been there. Things have been continuing to be built. Like for example, I also did mention some long-term R&D projects, Aztec, Zama as well, right? They're actually finally coming to market soon, early next year. So and how I mentioned that Zcash has continued to build regardless of price action. It's been kind of flat for the last few years, but they've continued to build, continued to launch new features. And I think with that price movement plus easier access that the Zashi wallet actually allowed for, that those two factors, the price plus accessibility, gave people the awareness of what has been built, and then the narrative continued to feed on itself, right? Because with the attention being there and the fact that the protocol has continued to evolve, like new technologies are still being built, and then people realize that actually maybe privacy still has some legs, right? It's not just like a dead sector. They've actually been building all this time, and it's actually getting more robust, actually getting better, and more upgrades are still coming. So I think the price movement happened quite coincidentally, but it's because of all these continued improvements, and for example how retail can buy Zcash through other chains using that wallet. I think that was a very good mechanism that allowed this trend to become that big, right? Because there have been so many Zcash kind of like pumps that have died over the years, but this was the time where it really took off. And I think those again, it's just a good mix of factors that was just the right time for privacy to come back.
And also about the token disclosures. I mean, I guess your prediction is not based on any kind of assumptions on the regulatory side, right? Like you're not forecasting this because you think that the SEC is going to come out with some rules saying they need to disclose certain stuff, but projects will just voluntarily go down this route because they think it's good for their project.
Yeah. Actually, that's a good point also. So I was kind of thinking more of the like how it's currently being approached, which is a voluntary effort, right? So what we're seeing has always been voluntary, but I think it's a good point because next year with the whole market structure bill, right? I think there would be more and more requirements from large institutions, or like if you want to get listings, maybe also in line with what Min talked about in the Korean markets. We'll probably see more and more of that, right? Where listings are not just kind of a Wild West, but I think more and more legal requirements will probably come out of that, especially for like investor protections and things like that. So I think I think for that is an additional factor that would kind of add to this and make token disclosures I think more of a industry standard, which is good for everybody, right?
What's the percentage that people assume when they try to come up with a fair value for Zcash? Like a percentage of what percentage of a Bitcoin market cap?
As big as you want to dream. It can get quite crazy.
Yeah. Okay. All right. And last but not least, our special guest Thomas from strategy team. Go ahead.
So my prediction is pretty straightforward. It's actually more business oriented than the market price action or the market developments. But I think it's what I tried to argue in this piece was that it goes along with the general theme of how RWA is becoming more mainstream in terms of crypto mindshare. And one of the fundamental changes that's incoming, I think, is that how crypto investors are now more looking to focus on the business rather than over the product. I think that's a major shift in the mindset that we are probably seeing in coming 2026. Whereas before, crypto investors kind of focused only on what the product is, where going forward, I think they will be asking more about how strong the business is, which translates to how much revenue will it generate. So that's why I focused on one of the aspect that I believe is underserved by traditional finance is those the business that has an episodic revenue stream, such as IP and movies, music, that are not organized in a way to sustain for who knows how many years, but they're more one-off type, or not one-off, but only has a cash flow that is guaranteed to exist for a couple period of times. So what I think is going to happen is that the rise of the cash flow tokens that are focused on cash flow rights of the certain project will be more popular going forward. And I think the market cap of those tokens will perhaps exceed about $4 or $5 billion in 2026.
How should we, like 1 year from now, what's the good way to measure whether your prediction is met or not? Like, so we need to somehow come up with definitions of cash flow tokens, right?
So it's kind of vague in what constitutes as the cash flow rights only tokens. I think it would matter. I think you have to take a look at how that token is perceived by the markets, whether it be perceived as a governance token or just a cash flow right instrument. So in that sense, if you add up the tokens that are viewed as the cash flow rights tokens, I think that's how you come up with the market cap exceeding $5 billion in 2026.
And you would include the buyback and burning tokens too in that category, right? Like Hyperliquid.
Those also, I think, that goes into the same category.
Do you have any thoughts on buyback? Is it a good thing or a bad thing, or should people do it or not? I mean, because there is also
I think going forward, it would follow how it is being perceived in traditional finance, because in the long term, I think the crypto market dynamics would somehow, would converge into how the traditional finance treats such financial events. Right now, buybacks don't seem to. It used to be. It used to matter a lot in terms. Let's say for Hyperliquid, an example, when the buybacks happen, it seems to bring up the price quite a lot. But these days, seems the effects are kind of muted. But going forward, I think the more projects that are kind of actively rewarding the community and the holders would be appreciated by the investors as well.
Yeah. Oh, I mean, the means question seems to imply that some people view buyback as negative. Were you implying is that the case?
Yeah. I mean, some people are saying that buyback is meaningless. And then also, if you look at TradFi, if you're on a growth stage, doing buyback or doing dividends are considered pretty dumb, right? You need to reinvest and then kind of speed up your business. So I think there are some people that kind of argue that at the crypto level, kind of most of them are in the growth stage. So they should kind of reinvest and then kind of accelerate their business.
Yeah, so I agree that the buybacks, the way it's seen is that if you don't have any better way to put up or place invest your money in, then you pay back the holders, right? I think the same logic would apply to the crypto going forward. But right now, I think whatever that brings, whatever the event that's seen as a positive event for the token price is perceived as a positive event, but going forward, I don't think it would happen in the next year, but maybe like 5 years down the road, it would be seen as similar to how it's being perceived in the traditional finance.
Yeah. All right. Well, I guess that was quite interesting. Got to hear what everybody thinks about each other's predictions. Seems like there's no massive disagreements from what I can tell, or you guys are just too polite. Anyway, yeah, I hope our viewers got some additional colors from this episode on our report. And I guess I'll see you next time.
Thank you very much.
Bye.
Bye-bye.